Welcome to Bears in Exile. Today is October 15th, and this is the weekend market overview. Looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. Well, we had another incredible day in the market, up 166 points, and that regardless of the news that we had on the potential downgrades coming from or on a slew of banks from Fitch, and just fascinating this whole action. And there's been some sites saying that this is short covering, and other sites saying that it is because somebody is dumping the dollar, which is driving everything up. Yeah, perhaps all of these things are happening, but I'm just going to focus on the indicators. And on the last video we were saying how the daily time period did look very bullish, and but that we had problems in the intraday time frames. Certainly the daily was right in the case of the action on Friday, ending at the highs of the day. Nice big green continuation candle. We are now into the shadow area of the most important recent peak, and definitely this is a for bears anyway, this is a very ugly time. Now, we've been watching the stochastics and the 14-day RSI moving average and all that stuff. We had another higher tick on the histogram and the MACD, and got a side tick on the 14-day RSI moving average, and an uptick on the CCI, massively high. Stochastics are still holding very high, but we actually got a downtick on the RSI, which is kind of interesting, because if you look at the downticks on the RSI, normally they precede a down move. We'll go back here to this previous peak. You can see it started ticking down on the RSI, and it gave it a few days of a continued green movement, and then it collapsed. If you look at the positioning of the stochastics, it's very similar. The positioning of the CCI, it's very similar. And the positioning of the histogram, very similar. So, can we expect a down move in the next couple of days? Well, yeah, it's possible. Certainly possible that it'll continue going up. I mean, it did get above the upper price consensus level, closed above it, definitively broke this prior peak. It's testing the peak before that, and if it gets through that, then, you know, technically it could have a run to the previous high, you know, 12,700 area. And definitely if it breaks this peak, it certainly should have a run at the 200-day moving average, just shy of 12K. Now, beyond that little warning sign, we've been talking about the short-term moving averages and what they were doing with the bar, and that has just been totally broken this time, beating the odds, really massively impressive. And we had also been talking about divergences in all of the intraday time periods. Yeah, it broke a couple of them today, but we still have quite a few. We still have one in the RSI, in the stochastics, no longer in the CCI, and certainly not very attractive in the MACD histogram and the short time period, and we still have this much longer duration one, and in the 60-minute time period we still have divergence in the CCI, in the stochastics, in the RSI, very large one in the MACD histogram. And we have been saying that we were waiting for the stochastic here in the 60-minute time period to finish its move up above the 14-day RSI moving average, and then click down and join it on the march down. Of course, that has not happened yet. We have not had the turn. And in the daily time period, we also said that we were waiting for the turn of the stochastics here at the top, and that has not occurred yet either. So just waiting, and boy, it is a painful wait. I do have some shorts. I'm not completely in, just in case this happened, and it has. SPX, more of the same, although we are now definitively above the upper price consensus level, very bullish. And we are, just like the Dow, testing the shadow area of the most important peak. And everything else can be said for the SPX that can be for the Dow, so no need to repeat that. The VIX almost had an inverse hammer, but it is looking poor, you know, completely honest. It is looking poor. It is looking like it's going to go down for a test of the 200-day moving average, but we still have all of these things that we've been looking at, which is the stochastics being in so low, CCI being massively low, waiting for divergences to play out, and certainly we have them. We have them in the MACD histogram, we have them in the RSI, we have them in the stochastics, we have them in the CCI. So just waiting, and that's kind of a broken record this week. Just waiting. TNA up to 43, getting above the upper price consensus level after testing it in the past couple of days. So very nice. This is not nearly as strong as the Dow or the SPX. We're just barely starting to get penetration of the bearish bar. And 60-minute time frame, negative divergence in the CCI, in the stochastics, in the RSI, in the MACD histogram. Yeah. So just waiting. And once again, the driver of all of this movement, the dollar, ended with a spinning top. It did get below the 200-day moving average. Very bad sign for bears. After fighting with it for a couple of days. It did not beat it naturally, but it got through it, and it is what it is. So on this, we've been talking about for a while the 14-day RSI moving average. We did think that this would be going down, but we also were expecting the stochastics to go up and meet it. That has not occurred yet, and we are getting a significant move with the 14-day RSI moving average. So, how about that? CCI very low, stochastics very low. RSI still some room to move to the downside. Histogram and the MACD also clicking down. And just for fun, I'm going to look at the 60-minute just to see if there are divergences in the currency, although divergences mean less with the currency because they are news driven. So, but we do have positive divergence in the CCI, in the stochastic, in the RSI, in the histogram. So this is also kind of like a broken record too, because just keep waiting. FXE, the euro, also very little miniature spinning top. We do have penetration into the bar by the short-term moving averages. We are above the major price consensus level, closing in on the upper price consensus level. CCI massively high, stochastic very high, 14-day RSI moving average doing its march up, and we have not had a move for meeting the stochastic and the 14-day RSI moving average. RSI itself having room to move to the upside still. MACD histogram clicking up. 60-minute time frame, negative divergence in the CCI, stochastics, RSI, MACD histogram. It's all there. Just waiting. Just waiting. GLD, our second VIX, little doji star. Metals have been very strange, in my opinion. Their moves have been very muted, and I do think that there will be a run in metals. Now, whether or not the 14-day RSI moving average, which did get an uptick today, is just going to march up without the stochastics moving with them, and they're just going to stay up there forever, which is what I guess some people think is going to happen. Remains to be seen. But I do think that it is natural and typical for the stochastics to meet up with the 14-day RSI moving average and move with them. And so this right here just seems totally out of place to me. And on all the charts where it looks like this, it is out of place to me. So we can expect to move in the metals once this breaks out of oversold. Certainly to mirror the that's not a good example. That's not a good example either. Well, where it's obvious that movement needs to occur, where it has a definitive slope. So SLV, also a little doji, and just like gold, muted. Stochastics very high, actually the fast turning down, RSI ticking up, 14-day RSI moving average ticking up. Uptick on CCI, still has some room to move before it gets massively oversold, or overbought, I'm sorry. So that's fine. Uptick on the histogram and the MACD. So, since we are living in a massively news-driven, optimistic time period, and perhaps we will get that run and they'll just continue to squeeze shorts all the way up to the very top. It is possible. I'm still not of that opinion, but if it does break this top, if it does take out the 200-day moving average, then hey, then they were right, and that is what's happening, and the expected downturn in the SPX, or the stochastics, was wrong. So we shall see, and I am still waiting, and certainly am not taking a long at this point. Maybe that's the wrong decision, but it is what it is, and we'll see what happens. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.